What's also important, though, is a, a very strong economy, according to the New York Times.
Did you read this New York Times article? So I wanted to read word for word what they open with, and then after that, subsequently, they say like all of the things that have gone wrong with the economy.
Yeah.
It's a totally contradictory opening statement in the article, but they said the economic rebound from the pandemic's devastation held strong in April. With another month of solid job growth, employers added 428,000 jobs, matching the previous month, blah, 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 blah. Growth in every major industry. Unemployment rate remained 3.6%, lowest in half a century. The challenge of a highly competitive labor market for employers, a shortage of available workers, which is bullshit, persisted as well. In fact, the report showed a decline of 363,000 in the labor force, which they're attributing to a highly competitive labor market for employers. So seeming the unemployment rate stayed the same. But that's because people are dropping out of the labor force. It fell from 62.2% from 62.4%, which is 363,000 jobs.
Yeah. So just to emphasize, headline, continuing vigor of the economy.
Yes.
Paragraph 4. 363,000 fewer workers in the labor force. But that's the vigor continuing. You just don't understand.
Right.
Okay.
And so in addition to that, labor productivity fell drastically. I saw a lot of reasons for this. Some people were saying it's the way that GDP is calculated. There's an increase in jobs that are just inherently less productive because of the pandemic, blah, blah. I have a different theory for this, though. Non-farm productivity, which is a measure of output against hours worked, declined 7.5% from January through March, which is the biggest fall since the third quarter of 1947.
That's interesting. Okay, so it's not just that we're making less stuff. It's that I had never heard of this measure before. It's that how much stuff we're making compared to the hours that we're working is also down.
Is down, yeah. And some people are attributing this to the quality of jobs, like the sectors that are growing and the way GDP is calculated.
Yeah.
And there might be some truth to that. But my theory is that some people that are falling out of the labor force are very high skilled workers that are unwilling to drastically change their line of work for a lower skilled position. And so they're just continuing to wait until the available job arises. And in some sectors, this is clearly leading to less than ideal worker quality because of inflation. They're like, all right, well, I can get a worker for X amount. And then it's just reducing the quality of the worker and then their productivity.
Well, and just even given the turnover that's happened from people leaving their jobs for any number of reasons throughout all the coronavirus bullshit, even if they are good workers, it's hard to just plug somebody into a new job and have the productivity remain exactly the same. So I suppose it does make sense.
Yep. So that's shocking. And then the stock market is having major problems, which people are still saying is a good thing, which I don't even understand. But Friday trading was a bit of a disaster. There was, so the Dow Jones Industrial Average posted its best and worst days since 2020 last week. But there were losses on Friday. And I think in all the indices. But I think that a lot of it has to do with the tech sector. Netflix has this giant lawsuit against them that is basically for the entire value of the company because apparently they misled their shareholders about their growth and then they're reducing the reduction in their subscriber base. So there might be some legs to stand on in this. There's the Twitter thing. And then people are just kind of phasing out what they view as less important stocks in favor for energy and things like that they think are going to be less volatile in a recessionary period. And then Powell ruled out the prospect of larger rate hikes on Wednesday, which caused all this volatility. So the S&P and the Dow recovered to some degree. So it's just going to be these ups and downs as people try to predict what the Fed does, what inflation is going to be like, which is clearly going to bury all of us. And as people start to lose faith in the tech sector, I don't know why anybody had faith in the tech sector to begin with. But yeah, I think we're looking at years and years of economic volatility. But I don't know. A lot of people got really rich during the Great Depression. So be a shrewd investor during this time and maybe
A lot of
Maybe
dips
you
to be
too.
bought. Just it's
Mhm.
hard to find the bottom.
It is. Yeah.
Yeah. And as you mentioned, we're going to get another consumer price index report for April that's going to drop on Wednesday. So this is obviously the monthly report on year inflation that has been hitting 8+% in recent months. Economists expect it will be lower than March's high of 8.5%, which assuredly means it will be higher than 8.5%. You can count on that.